Good morning, welcome to this weekly market update from AGM Markets. Today's the 9th of July 2012. What we'll be doing today is going through technical analysis on Euro dollar, cable, dollar Swiss, Aussie dollar and gold, trying to give some sort of a weekly outlook into the markets. For anyone who follows, we have three moving averages on each of these charts. The red one is 55-day moving average, 55 simple moving average. Purple is 100 simple moving average, and the gold is a 200 simple moving average. We're not making any trade calls or recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website, www.agmmarkets.com. Okay, let's have a look at the euro dollar chart. Let's just quickly flip it to the weekly chart. And what do we have? Well, as you can see, last week's candle, very bearish indeed. Basically because ECB cut rates. We also had some weak non-farms numbers as well. And when we do have weak non-farm numbers, we do very often get some dollar safe haven buying. So that was a kind of, in terms of fundamental look, that's why I think we did get the sell-off last week. You can also see that we had a weekly candlestick close below, weekly candlestick close at the 2012 lows as well. You can see that candle there was the previous low. We've now closed below that, so we're at fresh 2012 lows. So the fundamental outlook isn't looking too great in terms of Eurozone, and nothing really seems to be getting resolved. It's the same old story. In terms of a big weekly level that I would be looking out for, and the only thing that I have a real interest on this weekly chart is the 2010 low, which stands at the 1.18 level. You can see that to your left of your chart there. And it looks like we are heading towards that now. Do not know when we will hit it, but just got to look at the charts and see when we do. No one has a crystal ball, eh? But yeah, I mean, in terms of this week, what I think, what is likely to happen, in my opinion, is that we may get some sort of retracement, but there's nothing stopping it continuing to sell off. But in terms of the odds, I mean, we had a huge bearish candle last week. It's a bearish engulfing candle. So I mean, we're not really surprised if it did continue to sell off this week, but it also been do not be surprised if we do have a sort of slight sort of weak retracement candle towards the upside. In terms of moving averages, we're still miles away from them, but yeah, in terms of the only interest really on this weekly chart is that 2010 low. Will we get to that level, and what if we do, what will happen at that level? We flip it to the daily chart. Still a long way away from that 55-day moving average. Not a surprise really, being that we've had a huge sell-off. You can see there's huge three daily candles in a row there, where we sold off about 300 pips. So it's a very big sell-off there. You've got to be cautious. In terms of sort of selling opportunities, a lot of people will be looking out for will be this fib from the lows to the highs there, and that sort of level we'll be looking at will be the 50% Fibonacci retracement. As it often works so well in euro dollar, that comes in at 1.2473, and the 61.8 comes in at 1.2525. So it'll be interesting to see what happens if we do get any pop to the upside. That'll be the sort of levels to look at for selling opportunities, in my opinion. And yeah, that's kind of about it really in terms of the euro dollar chart. It's all I really have much interest in. Until we get any sort of retracement. I mean, you'd be very brave to be selling right at the lows here. I mean, a lot of sort of long-term players may be selling at lows because we've got a weekly candlestick below the 2012 low, but there's not a great risk to reward in my opinion. So the better sort of risk to reward players look for some sort of retracements towards the ups and then sell on any bounces either to the 50% or the 61.8. Okay, let's have a look at cable. Hasn't been selling off as drastically as the euro dollar. I mean, if you look at last week's candle, it was a bearish candle. It did engulf the previous one, but in terms of the weekly, we're still kind of getting held as well, and we're actually getting held at the 50% Fibonacci retracement. Surprise from that recent fib move, which we've spoken about many times before, and that comes at 1.5480. So that level's still holding on the weekly. And of course, if we do get any bounce to upside, keep an eye on the 55-week moving average there, when that comes at 1.5840. In terms of shorter time frames, let's have a look at this 4-hour chart. Actually, no, let's look at the daily. In terms of the daily, the fib, I think we spoke about this last week, from the lows to the highs. Yeah, we did, and we said look out for the 200-day moving average and the 50% Fibonacci retracement, and surprise, surprise, we got that bounce off that level and we started to sell off. So that fib is still in play. We still have the 0% line taken out yet, but if you draw a fib now from the lows to the highs, sort of recent swing high, we are now getting buyers coming in at a 61. Sorry, I drew that wrong there. We're now getting buyers coming in at a 61.8% level. So two sort of fib setups are in play here. So it's a big sort of battle between the bulls and the bears here. It'll be interesting to see what happens. I mean, the bigger fib normally wins. So the sellers would not be surprised if the sellers did win this battle. But keep an eye out on that, and that's what I'll be focusing on this week, really, in terms of sort of 4-hour and the daily charts. There'll definitely be the levels that I'll be focusing on. Okay, let's have a look at the dollar Swiss. What do we have on the dollar Swiss chart? Still all about this sort of trend line in terms of the daily chart. Still ripping towards the upside. This dollar Swiss chart, it doesn't look like it wants to slow down. So the wise thing to do would be to look for any sort of buying opportunities if we get a retracement, and if we do, then I'll be using it via a fib and looking for any sell-off. This is on the 4-hour chart. If we get any sell-off down to the 50% level, which at the sort of 0.9631, then that'll be a sort of healthy buying opportunity. But in terms of the daily, let's just go back to this daily chart a second. If you draw a line on that high there, which got taken out, you can now see that we're pretty much sitting on that as we speak on the daily chart. So previous resistance is looking to be acted as new support. So it's not exactly a healthy retracement. I would ideally look for a healthy retracement, maybe down towards this trend line support or towards one of these fib levels here. But people are already coming in at this level for buying opportunities. So quite an interesting chart of dollar Swiss, but I'd prefer to look for a buying opportunity at a healthy sort of retracement level there. If we look at the Aussie dollar now, just from purely looking on this daily chart, we're in a sort of slight up move here, and we're currently getting bid up at the 100-day moving average. We're pretty much testing this level as we speak. So buyers are looking to come in at this level. So we got held at the 200-day moving average. So we're kind of in a tight sort of range here. Ideally, I'd like to look for buying opportunities if we've got a healthier retracement. You can look at the 50% Fibonacci, the 61.8, but nothing really massively interesting on that on the daily chart. The 4-hour chart, I think, is much more interesting. We see we have a nice sort of trend line. Sorry, let's get on there. Just trying to draw that again. We have a trend line support in play on this daily chart, which is currently getting bought, and it also coincides with the 100-day moving average as well. But a lot of other people will be looking at, and I'm definitely looking at, is I mean, the way to play trend lines, in my opinion, is to look for the sort of bounces, and you can lose those bounces as well by using the Fibonacci retracement levels. And you can currently see here we've got a bounce of the trend line support, which coincides with the 50% level at 1.0161. So that's now currently being acted as support. So it's a nice little confluence level there that buyers are already coming into. I mean, in terms, if we zoom in a little bit on the 4-hour, you can see we need to get above this 55 simple moving average as well for any sort of momentum towards the upside. But no, the Aussie dollar looks fairly bullish, really, much more bullish than Euro dollar or cable. So if you're looking for better buying opportunities, then I'd personally look on this chart. Okay, let's have a look at gold. Gold chart is pretty much identical, the same things we spoke about last time, especially on this weekly. It's all about the 1560s, in my opinion. We still need a weekly candlestick close if you want to be looking for any sort of bearish momentum. But unless we do get that bearish weekly close, then I'm personally still a bull, and I'm still in the bull camp, really. But it's been very, very choppy on gold. Really not interested in this chart at all, to be honest with you. I mean, in terms of longer term perspective, the fundamentals are kind of still there to be buying gold. It's still good to, a lot of investors will be hedging their portfolios, etc., etc., with all the headline risk out on the markets. So I mean, gold still does have some potential to go towards the upside in terms of the fundamentals, but this chart isn't really looking too convincing to the upside. Especially last week's candle, it's just been reversing on itself. Really get a nice reversal at the bottom of this level, and then it just reverses back down. So it's just pure chop range, really. But I mean, the sort of the last sort of 1, 2, 3, 4, 5, 6, 7. It's last sort of 9 weeks have just pretty much been the same sort of range, really. The 1560, the sort of 1560 to the 1630, really. You just look at this sort of last sort of chunk right here. It's just been chopping inside this range. So if you want to play the range, then feel free just to look for sort of reversals and sell at the highs and buy at the lows. I mean, you can see the 100-day moving averages now come around there. So if we do get a bounce up, then that could be a good sort of sell opportunity there. But no, I'm not really massively interested in this chart. I mean, we can see on the 4 hour. If you zoom it down to the 4 hour, you see we've got a nice sort of trend line resistance there. And on the daily, we're starting to get some sort of trendline support to the upside. So that's a bit clearer, really. If you're looking at a shorter term time frame, that's a much clearer chart. So you can look at some buying opportunities around here. If we come back down to this trendline support, look for some sort of reversal like we did there, nice sort of hammer candlestick to buy up. That'll be what I'll be looking out for. That's the chart that I'll currently have on my gold chart. And see what happens around there if we do come down towards the trendline support. Okay, that's all for the charts. Let's have a look at the Forex calendar. What have we already come out today? We had Draghi speaking, didn't really say too much. We had Chinese CPI overnight that came in slightly lower than forecast. In terms of tomorrow, I mean, I think this week's a very quiet week, to be honest. I mean, tomorrow we have UK manufacturing production out at 9:30. Wednesday we have the Canadian trade balance numbers, US trade balance as well, both at 1:30 UK time. Probably the headline for the week was the FOMC meeting minutes out at 7 PM UK time. See what Ben Bernanke has to say, especially after those weak job non-farm numbers we had on Friday. Could get a hint at QE, but very unlikely. It looks like he just wants to stick with the Operation Twist. On Thursday we have some Australian news overnight and some Japanese news as well, but in terms of the sort of main London trading session, we have the weekly jobless claims out at 1:30, and on Friday very quiet day again, but the headline news is out in the US at 1:30 of PPI month on month, and at 2:55 to finish the week we have the preliminary University of Michigan consumer sentiment data out at 2:55. So quite a week in terms of the Forex calendar, but it doesn't mean that it will be a quiet week in terms of the charts and all the movements in the market. So yeah, that's it for today. Hope you enjoyed this video, and I'll catch you next week. Take care.